Investing may often seem like a game, reserved for those with deep pockets and substantial disposable income. For decades, the idea of entering the world of finance with only $100 was perceived as impractical or even impossible. Fortunately, the modern financial landscape has transformed significantly, allowing everyday individuals, even those with modest means, to participate in wealth-building opportunities. If you have $100 or less and are wondering whether it's possible to invest wisely and meaningfully, the answer is yes. With the right mindset, strategies, and tools, you can take powerful steps toward financial independence and long-term wealth, no matter your starting point. The first and perhaps most crucial principle is understanding that the amount of money you start with matters far less than your habits and consistency. Investing small amounts frequently is far more effective over time than investing a large lump sum only once. The power of compound interest means that even a small investment, left to grow over the years, can multiply significantly. Think of your first $100 as the seed of a much larger tree. While it might not look like much in the beginning, with consistent care and attention, it can grow into something substantial. The goal, then, is not just to invest $100 once, but to build the discipline of regularly putting aside small amounts into productive investments. One of the biggest advancements that make investing with little money feasible today is the rise of fractional shares. In the past, if a single share of a company like Amazon or Google cost over $1,000, someone with only $100 would be completely excluded from owning even one share. Today, however, many brokerage platforms allow investors to buy partial shares of expensive stocks. This means your $100 can now purchase a piece of nearly any company, regardless of its stock price. Fractional investing allows you to diversify even with a limited budget and makes the stock market more accessible than ever before. Choosing the right platform is essential when investing with a small amount of money. Not all brokers cater to beginners or small investors. Fortunately, there are several online platforms and mobile apps, such as Robinhood, Fidelity, Charles Schwab, SoFi, and Webull, that offer commission-free trading and low or no account minimums. Some of these platforms even offer bonuses for signing up or adding funds. It's important to compare features such as ease of use, customer support, research tools, educational content, and most importantly, fees. When you're investing small amounts, even minor fees can significantly impact your returns. So using platforms with no transaction or maintenance fees is crucial to maximizing your growth potential. Another excellent way to invest small amounts is through exchange-traded funds, ETFs. ETFs are like baskets of investments, such as stocks or bonds, that trade on the stock exchange just like individual stocks. They offer instant diversification, which helps reduce risk, and they often have very low fees compared to mutual funds. For example, investing in an S&P 500 ETF means your $100 is automatically spread across 500 of the largest U.S. companies. That's a powerful way to reduce the risk that comes with betting on just one company. With fractional shares, you can even invest in several ETFs with only $100, allowing you to create a diversified portfolio from day one. Robo-advisors are another modern tool that make it easy to start investing with little money. Robo-advisors are automated investment platforms that use algorithms to manage your portfolio based on your goals and risk tolerance. You simply answer a few questions about your investment timeline, income, and comfort with risk, and the platform builds and maintains a diversified portfolio for you. Many robo-advisors, like Betterment, Wealthfront, or Acorns, allow you to start with very low minimums, even less than $100. Some even round up your daily purchases to the nearest dollar and invest the spare change, helping you build wealth passively. This kind of automation is especially helpful for beginners who may not feel confident choosing investments on their own. Micro-investing apps have revolutionized how beginners start their investing journey. Apps like Acorns, Stash, or Public allow users to invest very small amounts, even as low as $5, and often come with educational tools to help users understand their investments. While some of these platforms charge monthly subscription fees, others offer free tiers. If you only have $100, it's important to choose platforms where the fees won't eat into your returns. Even though the returns on $100 may seem minimal at first, the experience you gain and the habit you build can be invaluable as your income grows and you're able to invest more over time. Another overlooked method of investing small amounts of money is through retirement accounts, particularly Roth IRAs. While $100 may not seem like much, opening a Roth IRA allows you to contribute post-tax dollars that grow tax-free over time. When you withdraw funds during retirement, you won't owe any taxes on the gains, which can be a powerful advantage. Many brokerages allow you to open a Roth IRA with no minimum contribution requirement and invest your $100 into ETFs or mutual funds within the account. Beginning your retirement savings early, even with a small amount, gives your money more time to compound and accumulate value over the decades. Investing in yourself is another valid and often overlooked form of investment. With $100, you could purchase a book on investing, enroll in an online course, or subscribe to a financial news service that improves your financial literacy. The returns on financial education can't be measured immediately in dollars, but they often result in better decisions, higher earning potential, and a lifetime of smarter money management. Knowledge about budgeting, interest rates, compounding, and diversification helps you make wiser choices with every dollar you invest in the future. Your most valuable asset is your mind, and an investment in learning pays the highest dividends over time. Even with a small amount of money, you can begin real estate investing through real estate investment trusts, REITs. These are companies that own or finance income-producing real estate across various sectors, such as residential, commercial, or industrial. REITs are traded on major stock exchanges like regular stocks, and many are accessible through ETFs or fractional shares. This allows you to gain exposure to real estate without needing thousands of dollars for a down payment or property maintenance. Real estate tends to perform differently than stocks and adds diversity to your portfolio, which can help reduce risk. For those who enjoy a more active or creative approach, peer-to-peer lending platforms and crowdfunding services offer another route for investing small amounts. Platforms like Lending Club or Fundrise allow users to pool small contributions to fund loans or real estate developments. While these methods come with higher risk, they also present the possibility of higher returns. Before jumping into alternative investments like these, it's important to understand the platform's rules, risks, and expected returns. With only $100, it's best to start conservatively and gradually explore these areas as your knowledge and financial cushion grow. One of the most critical aspects of investing with little money is managing expectations. You're not going to double your investment overnight, and you shouldn't expect to retire on your first $100. However, every great investor started somewhere, and your goal is to build consistency, not instant wealth. The habit of investing, even in small amounts, has a far greater impact over time than the initial dollar amount. Treat this as your training ground, where you learn how to navigate market volatility, develop patience, and understand the emotional ups and downs of seeing your portfolio rise and fall. It's also important to understand that starting with little money requires a focus on long-term thinking. Trying to make quick profits with risky bets or trendy stocks often results in losses. especially when you can't afford to absorb them. Instead, think of your $100 investment as the foundation for a lifetime of financial security. As your income grows and your knowledge deepens, your ability to invest larger sums will follow. What matters most now is building the behavior and discipline that will serve you for decades. In addition, don't overlook the power of reinvesting your earnings. If your investment earns dividends or interest, putting those payments back into your investment rather than spending them allows your money to compound more quickly. Reinvestment is a silent yet powerful force that accelerates your portfolio's growth without requiring additional capital from your pocket. Many platforms offer automatic reinvestment features that make this process effortless, even for beginners. Lastly, your mindset is everything when investing with limited funds. Rather than feeling discouraged by the small starting amount, feel empowered by the fact that you're taking control of your financial future. Starting small doesn't mean thinking small. With today's technology, reduced barriers to entry, and widespread financial education, you have more tools than ever to become a confident, savvy investor. Stay curious, stay disciplined, and continue learning. The earlier you start, the more time your money has to grow, and the sooner you begin building habits that will lead to long-term financial success. In conclusion, investing with $100 or less is not only possible, it's a smart and powerful move when approached correctly. By leveraging fractional shares, low-cost ETFs, robo-advisors, micro-investing apps, and retirement accounts, beginners can take meaningful steps toward building wealth even with limited funds. The most important thing is to start. With discipline, patience, and education, your small investments today can lay the groundwork for a more secure and prosperous tomorrow. Remember, it's not about how much you invest, it's about how consistently you do it and how wisely you grow over time.